We are here to take a look at Meta's report for the second quarter. They just released it a minute ago, and we are gonna go over some key points. Later on, when they release their 10Q, I will go over that one with more info. So make sure to subscribe to my channel and watch this video until the end. They had a 32 billion revenue for this quarter, which is 11% more than the same quarter last year. And 3 months ago, they had a guidance for their second quarter for the revenue to be between 29.5 to 32 billion, and they have delivered on that and hitting the top target. They have an operating margin of 29%, which is the same as last year and is very impressive, and a 24% net margin, which is also pretty impressive. And they have increased it 16% compared to last year, but the earning per share increased 21%, probably because of share buybacks. Most of Meta revenue comes from family of apps, which is Facebook, Instagram, and Messenger, and they have increased their daily active users by 7% compared to last year, and now they have 3.07 billion. Their monthly active users are 3.88 billion, which is a 6% increase since last year. These are very impressive numbers. Imagine half of the world being your active users and being able to increase it again. This is the part that I always look for, price per ad, which decreased 16%, and that's expected with this type of economic conditions that we have right now. But the fact that they were able to increase their revenue by 11% despite the price of ad going down is very impressive. They only spent 1 billion on share buybacks this quarter, which is a very small number compared to what they have available for share repurchases. But probably they had better investments to do with that money. And the price of the stock have surged in the past 6 months, and right now I believe it's a little bit overpriced. So I'm happy that they didn't do that much repurchase this past 3 months. Right now they have a cash and cash equivalent of 53.5 billion, and free cash flow was around 11 billion for the second quarter of this year. They have 80 billion of long-term debt, but they can easily pay it off using their cash. They have decreased their headcount by 14%, which was part of the year of efficiency initiative that they have started. They have given a guidance for their next quarter too, which is 32 to 34.5 billion of revenue. 3 months ago, their guidance for the full year of 2023 was 86 to 90 billion, and now their anticipation is 88 to 91 billion, which is still lower than their year 2021 and 2022, but it's an increase over 2020. So they are still growing, but year 21 and 22 was exceptional years. They have lowered their capital expenditure expectation for full year of 2023 from 30 to 33 billion. Now the range is 27 to 30 billion, which is still a lot of money, but comparing to last year, it's lower. So it seems that they are working on their efficiency. They have a net margin of 22% for the whole 6 months of this year, which is pretty good, but I believe they can do better than this. So hopefully the next 6 months will be more efficient and they can hit 25%. They have a total asset of 206 billion, which most of it are current asset or property and equipments. And their total liability is 72 billion, and they can almost pay all of it using their cash and marketable securities. So that's pretty impressive. Their cash from operating activities has increased 20% compared to last year, from 26 billion to 31 billion, and their share-based compensation increased at the same amount too, but with lower number of employees, hopefully this number will go down soon. Right now it's 23% of cash from operating, so it's not high, but it can go lower. They usually spend a lot of money on share buybacks, but this quarter they haven't done that, which I'm happy about because I believe right now they are a little bit overvalued. But we have to wait for the 10Q report to see how much their share count amount has gone down. As you can see, almost all the revenues come from family of apps, which is advertisement in Facebook, Instagram, Messenger, and WhatsApp. But because of economic conditions, probably people are not focusing on metaverse right now. That's why their Reality Lab revenue has gone down. But they are still investing a lot of money in metaverse. So they make a lot of money in family of apps and spend a bit of it in Reality Lab. Some investors were concerned about this, and Mark Zuckerberg decided to pivot a bit and invest less money on these things that can't turn a profit for decades. But Meta always has been in the forefront of technology, so hopefully they can create something to increase their revenue from metaverse. But that will come probably 10 years from now. They have increased their free cash flow by 35% compared to 6 months in 2022, which is very impressive. It seems investors were very happy with Meta's result. That's why it has gone 4% up. But I believe they are a little bit overvalued right now, so I won't be adding to my position. Hopefully it will come down and I can buy more of this great business. So that was it for this video. I hope you enjoyed it. If you did, make sure to tap the like button, subscribe to my channel if you haven't done already, and watch this video with the recap of Microsoft quarterly report. As soon as Meta comes out with their official 10Q, I will create a video on that too. I hope you have a great rest of the day and see you on the next one.